Let's now welcome in our next guest. We've got Neeraj Dewan, our director at Quantum Securities, joining us this morning. Neeraj, great to have you with us, especially on a morning where we've got so much news coming in on the global front. And given the kind of concerns, heightened concerns that we've been tracking with regards to those trade wars, it seems that the US is going ahead with those tariff hikes. Run us through the kind of implications you feel this will have in terms of impact on equities.
Yeah, good morning. I think what happens globally definitely has an impact on India, though we are not directly impacted by the trade tariffs put by US on China. Once this comes through, then definitely there can be some pressure on the global growth, which will in turn have an impact on emerging markets also, to the flows which are coming to emerging markets. We've seen for the last few days the FIs figures have been negative, they've been selling again. So that renewed buying which we were hoping for may not come if these kind of tariffs are imposed, and then global growth concerns come back, and then there will be people will be more cautious, and their liquidity will not be that great. So that said and done, domestically also we have cues which are very important, which are going to come up. So looking at what is happening globally, and looking at what news story to get from the domestic front, whether it's the slowdown which FMCG stocks are showing in the results. One has been cautious in the market, and I think would like to be cautious for some more time.
Let's talk about individual earnings as well then. And Neeraj, with respect to Eicher Motors, do you think that a lot is in the price in terms of a slowdown? Because we're not going in with very gung-ho expectations. Where does Eicher go from here? What's your sense on numbers?
Yeah, I think the kind of numbers which have already been coming in from the auto pack. One thing is good that we get these month-on-month numbers, so we know what to expect. So like you rightly said, expectations are low. So I feel that the stock has already corrected from the high levels. The valuations which had become very steep are now becoming more reasonable. So looking at the expectation in the market, I don't think even if the numbers are muted like is expected, unless until there is definitely a very significant downside on the numbers. I think if they are more or less in line with expectations or slightly less also, I think the stock will not react very majorly on the negative side. So if suppose the numbers are in line, I think the stock may in fact bounce back also, because bad numbers are already in the price.
Okay. Neeraj, how would you approach Reliance now? Do you buy this decline, or do you wait it out, because the concerns with regards to the huge debt on the balance sheet and the core business not performing or contributing as much seem to be pretty valid?
See, I think I would wait it out, because if you're not getting that FI flow coming back, what was happening in the last couple of months was the market was doing well because of these 4-5 stocks, and because FI money or money was chasing these 4-5 stocks, they were becoming more expensive. So now because that buying is stopped or the selling is coming back, so these positions are getting reversed, and more or less the concerns regarding their own business, the oil and gas business, is also there in the stock. Though I am positive on the telecom and the retail front in Reliance, I would be buyer at some point, but I would wait it out. The stock may not correct a lot, but there can be some time correction in the stock. So I would wait it out. I'll see when the circumstances are reflecting that you're getting a renewed buying coming back from institutions also. Then Reliance can again come in the radar as far as buying is concerned from FIIs. So then we can again come back into the stock. So for the time being, I would wait it out.
You're looking at decent valuations in FMCG. Neeraj, I'm kind of curious about that, given the kind of slowdown we've been seeing in volume growth across the board, the pressure on margins. Why do you feel this could be a potential sector to look at?
Yeah, what is happening right now is that they are concerned on the global front, they're concerned on the domestic growth front, then we're not very sure of what's going to happen on the political front. So everything happened negative. So we are only looking at the negative part. But FMCG stock we've seen, specifically staples, they've been actually trading at very high valuations. And because of this slowdown, it's an opportunity where we're getting them at decent valuation. Stocks like Hindustan Lever, Dabur, they've all corrected. Grounded Consumer, they've all corrected, and we've seen these stocks and the performance in the companies have been very great. So they can be 1 or 2 quarters here and there, but if you see a trend over the last 3 to 5 years, the CAGR growth has been tremendous, and the volume growth is also picking up for most of these companies. So I think these are opportunities where we are getting these companies at decent valuation. We're getting these companies at 35 or less than 35 times current year, next year earnings. So I think that is the opportunity to buy some of these companies.
Opportunity you see, Neeraj, is clearly in corporate banks, as one can pick up from your portfolio. And to be fair, I mean, we have seen decent performance coming in, but there is still some nervousness with regards to the liquidity crisis that continues to loom. Is that something that you're also tracking closely? Just your thoughts on it. I understand that some of these corporate banks are more longer term plays, but in the near term, the market's still a little nervous when it comes to financials.
Yeah, market is nervous because the liquidity crisis again come back post September. Now again we had this fear of liquidity crisis which we're going through now, and plus a lot of these corporates which have this pledged shares and exposure to some of these corporate banks. So that concern is there. But I think we have seen the major part of the concern, according to me, that a lot of these things have already again been priced in. And some of these corporate banks, one actually needs to be very selective when you're looking at corporate banks also. So there will be the large caps which have all again corrected. Even a bank like State Bank, the numbers are today, so we can see the numbers and then we can take a call for the shorter term. But over the longer term, even State Bank has corrected. And there are other part of the banks which are exposed to MSME lending. So we like some of the stocks, some of the banks which are lending to MSME, because MSME as a sector has come out of a lot of trouble in the last 3-4 years because of GST, demonetization. So now they're out of all that trouble. So again, that sector is picking up. So some corporate banks which are exposed to them have opportunities in that sector also. So one needs to be selective, but I think at this price also there are opportunities even from a medium to long term perspective.
Looking at that, liquidity squeeze, coming up, Neeraj, given that there has been some talk on cyclicals, yes, on infra capital goods, some of which may have slowed down temporarily while we're in election period. But if we're also now looking at a possible liquidity squeeze, would you still be bullish on some of those pockets?
Yeah, because see, there are two factors. One is that interest rates are still low and the order books are very healthy. So once you are out of this election period, you're going to get, I think, that capex cycle coming back again, though it may have slowed down temporarily and the coming back may take a quarter or two. But I am positive that looking at the order books and looking at the interest rate scenario because of low inflation in the country, I think that is bound to come back. A lot of the private sector also had they held up to the capex because of, I think, liquidity crisis which happened in the last quarter last year, plus because of the impending elections which are coming. So I think that capex also has to come back, and though it may have got delayed by a quarter or two, but I think that is very much on the card and which should which should come ahead in the next 2-3 quarters. So I think because of that, I'll remain positive on capital good and engineering and infrastructure space.
Great, Neeraj. Thanks very much for joining in and giving us a take as to what exactly you're looking at in this market.